During the last 2 months, LHV Persian Gulf Fund has pretty much moved sideways. In May, we had performance of -2.9% and in June -0.2%, bringing our year-to-date result for 6 months to barely above break-even to +0.5%. The biggest news during the 2 months for sure was the decision that came out of MSCI. They decided to upgrade Saudi Arabia to emerging market index. This decision follows FTSE's similar decision 3 months earlier, and this means effectively that 1 year from now the whole GCC region will make up more than 5% of the global emerging market index, and the whole region will become very important and relevant for investors investing into the emerging market world. And since the region so far has been underinvested by foreign investors, then this will likely mean tens of billions of dollars flowing into the GCC region. The second big news from the region also came at the end of June, when OPEC had its regular biannual meeting in Vienna, and they decided that after 1.5 years of withholding 1.8 million barrels from the oil market, the global oil inventories have rebalanced, and they have reached now their long-term averages, or even dipped slightly below that, and that now is the time to bring back some of those production capacity. And they agreed to bring back 1 million barrels of oil to essentially contain the oil price increase. But knowing that information, you need to factor in that Libya and Venezuela already are producing less oil than their current production quota, and the US is pressuring Iran because of its nuclear and rocket program, and all of the countries and companies that are supplying oil from Iran to find an alternative source of supply for its oil price, for its oil supply. So essentially, this might actually mean that OPEC brings on additional supply just to replace some of the supply that's going out of the market. And that is the reason why oil price actually hasn't decreased after this OPEC's announcement, but has actually increased, and Brent oil price is already trading close to $80 per barrel. Big part of June was dominated by Ramadan season, and the regional equity price moves were very slow. But now in July we're expecting second quarter financial results, and the markets should become more lively. As you can see on the chart, then the biggest part of our investments is invested into the United Arab Emirates, and this is where we find companies with the best value right now. As of end of June, the whole fund portfolio trades at 8.2 times forward-looking earnings, 1.0 times book value, and offers 4.4% dividend yield. So just looking at those ratios, it's definitely attractive. Thank you.